Hello, today we are solving Jan 2023 Unit 2 question number 3 Part E. Evaluate the project for the company using the calculations made and considering any other relevant factors. Here for the evaluation, investment, we can see for investment decisions we were asked to calculate the net present value. Net present value, it also calculated WACC. So now if we should if it is positive, then the project is profitable even after 5 years. NPV should be positive. If it was negative, then it is not worth pursuing. You will make loss, it means. Then also if there are multiple projects, the one with the highest NPV will be usually preferred, and it helps you to understand, you are taking into consideration some discount rates, cash flows, so it is helping. All this NPV is helping you to understand the nature of your investments, but you should bear in mind it is estimation and certain costs might not be included, and investment, in the initial investment, how will you be able to secure? All these other questions. So now for pursuing the project, the points for the pursuing the project, what is the argument we are going to make? We can see that the NPV for one turbine is at 306,066 at the end of 5 years, and for 40 turbines it was at 12,242,630 at the end of 5 years. So which means NPV is positive and it is worth pursuing. The project is worth pursuing. This method of generating electricity is also friendly, sustainable, environmental friendly, no carbon, which means that there is no carbon release. So it is a very important role in the future methods of generating electricity, because other methods, compared to other methods which might get banned or taxed heavily, so it is a good investment, you can say. But what are the points you will say against the project is, you can see that these are not the actual figures, these are estimations. Like we had said, it is able to generate only 65%. The wind might not be available like even 50% of the year. We don't know, it's an estimation. And other costs have not been included. Certain costs might occur, like it might completely even break down. So you don't know. So in such cases, the cost will increase, revenue will go down, and so the project is not worth pursuing. And also the net present value is not considering the depreciation cost, it is only considering the cash flows and only general costs. So what happens if the inflow turbine completely breaks? That means the profit will get lower than the cash flows. And also the project has a large initial investment of 50 million, which was assumed that you are going to raise through different sources. You might not even achieve this much. For example, through one we are getting through debenture, preference and ordinary shares, might not be able to secure the amounts you have mentioned. So in conclusion, you can say that since the NPV is positive at this much at the end of 5 years, it is better to invest in the project. You can just give your own conclusion. You might as well say no, because there are so many disadvantages compared to advantages. You can say that it is not worth investing in the project, but you have to give one solid conclusion for the answer. In conclusion, you can say that my belief is that that you can